Welcome back to Sell Ready Podcast. Today I have Sergio. He is the founder of and managing partner of asset management at Equiturn Business Solutions. So Sergio, he helps lead a platform that combines investment banking and private equity with approximately $1.5 billion in committed capital, focused in sourcing, evaluating, and investing opportunity across multiple sectors. So Sergio, welcome.
Thank you very much, Elisa, for having me.
Yeah, I mean, I'm very interested in like diving deeper into what you guys do at Equiturn. Could you tell me a little bit more?
Yeah, with Equiturn started about 9 years ago as a boutique investment bank, providing business solutions at the beginning, and now we do full investment banking services to our clients. I joined about a year ago to create the asset management side of the business, and that's where the funds that we currently have are situated. Basically, run the asset management division. I'm the global head of asset management at Equiturn and the managing partner for QSO Capital Management, which is our investment advisor. We have two funds, which we're having our next close June 30th for additional capital. One is the Mega Alpha Fund, which we have about 1.5 billion in committed capital. And the other one is a Legacy Growth Fund, which is about 200 million. That's open in the hedge fund structure. Throughout the last few years, we have managed to get ourselves somehow, some way, sneak into some significant deals, most specifically in the sports media entertainment arena. So we participated on the bid side for the acquisition of the Boston Celtics, which unfortunately we didn't win. We also were involved with a bid for the acquisition of the TikTok US side of the business, with that old issue with ByteDance and Chinese involvement and the US issue with privacy. And from there, we've participated in deals with other NBA teams. We're currently on the buy side mandate for NFL team for a prospective new owner. And we're also dealing with the NBA in the one of the expansion teams that are going to be given to a new ownership group probably by the end of this year. Through all that pipeline, then our funds also invest in sports and entertainment. We have commitments and investments in two film studios and in different areas of other sports. We're currently in negotiations to acquire a football team in Europe. So it's very exciting times.
Cool. I love it. I love it. And tell me, and it may be different. What really makes a sports team immediately stand out as something that's investable?
Well, sports used to be trophy assets, right? Somebody would say, I own a piece of this team or a piece of that team as like a status symbol. But sports have become over the last year or so an asset class on its own. The biggest players in sports, Apollo Management, Aris Management, they have launched over the last 12 to 24 months significantly large funds, anywhere between $4 to $8 billion dedicated to sports. I mean, Apollo is the majority owner of Atletico de Madrid, for instance. Clear Lake Capital also is a big player. They own a big premier team in England. So it has become an asset class on its own. There's a very good sense that still we're just in the beginning of this, because as it becomes an asset class, it could expand to a broader investment base. And so we try to identify where there's value or hidden value in certain teams and try to monetize that for our LPs.
Yeah, and when you mentioned you look to identify value, so when an opportunity is coming across your desk, and let's just say you're looking at one of these sports teams, like what's the first two or three things or attributes that you're looking at to consider, hey, this is something that's worth spending time on?
Well, it differs between the U.S. sports and international sports. U.S. sports leagues are close-ended leagues. So basically, once you're in the league, you stay there forever. So the appreciation there is based mostly on the scarcity of the product. Not anybody can become an NFL owner or an NBA owner. So people look at it as an opportunity to be playing with an elite group. Also in the US, valuations are very much based with TV rights, which have significantly increased over the last 5 years with the addition of all the streaming platforms and networks that are actually buying rights for certain games. Netflix has some boxing bouts. It also has NBA and NFL games on certain days. Amazon has bought the rights for the Thursday night football games. And so it has become a much bigger pie to split among the teams. So that helps the asset class of the U.S. Overseas, for instance, European football, there's relegation and promotion. And that promotion, if you can manage a team to take it to the next tier of competition, comes with significant upside revenue. So like I said, we're currently looking at a European football team in lower tier division and try to bring that team into a higher tier division. So that would bring us, 3 or 4 or 5x multiple on TV revenues, merchandising, match day revenues,
Right.
sponsorships. And that's how we then try to identify the value of those teams for the future and try to return a nice multiple of the investment money for our investors.
Yeah. Yeah. Okay. Okay. Makes sense. And it can make sense how it can differ based off of just different economic standpoints inside that specific field, depending on location as well. So I love how you kind of separated, hey, a buyer, or, as we're looking to acquire a sports team in the US, these are the factors that actually attribute to whether or not we would buy this deal. And those factors would be one, the TV rights, and then two, the scarcity based off of the amount of teams and that it can only have one owner. But there are different factors amongst other countries. Now, I would love to switch gears here. And have you exited a business before as well?
From acquisitions that we've done in the fund? No. Like I said, we started this a year ago. Our
Uh-huh.
investment period is 5 years. Our close end is 7 years. So we are right now in a deployment mode, and we're going to
Okay.
continue to deploy probably for the next 2 or 3 years. And we look to exit probably by 2030 going forward. And that's when we hope to get the multiples that we try to achieve.
Okay. Okay. And I guess more so in the past, even before the fund. Tell me a little bit more about your experience before, Equi Group, Equiturn.
Before Equiturn, I did about 12 years of business consulting as an external advisor for mergers and acquisitions of
Mhm.
different companies, especially in Latin America. Prior to that, I was involved in a family office that I run a family office and a hedge fund before that. Started my career at Goldman Sachs in New York, trading emerging market debt right out of a MBA. I did my education, even though was not born in the US. I've been here for a long time. I did
Yeah.
my undergraduate at Wharton. I did my MBA at Columbia. And that's how my finance career started. So I've been involved in finance for about 30 plus years. Exiting for somebody else is very different than exiting for yourself. In the past, I've advised in exiting and entering into investments for other parties, for other funds, for other people. Now we're in a position where we are actually entering and exiting for ourselves, our capital, and our LP's capital.
Yeah, and I want you to dig a bit deeper here. You mentioned that it's different for exiting for yourself versus someone else. What are those factors that you're considering?
Well, when you're entering into somebody else, you participate in the due diligence process, you participate in the structuring process, but the decision is made by the IC committee of each party. So if I'm advising somebody on the buy side, I can present to them our deal memo, our structure, our full pitch of everything that we consider to be beneficial or risky in an investment. But the decision is ultimately made by the IC committee of the entity that is actually doing the acquisition. On the flip side, if we're advising on the sell side, we will prepare all the necessary structure and documentation to be able to attract buyers. But the decision as to whether to accept certain terms or prices or any conditions in the sale, it's also based on the owner's decision. When you're doing it for yourself, I chair the IC board here at Equiturn. So ultimately, the decision to write the check lays on me. So we go through all the process of structuring, of modeling, of of valuation, of any kind of different in how to view the investment, and then ultimately the decision to actually write the check lies on me. So it's like the buck stops here kind of responsibility. You can advise people saying I will do this or I will do it this way, but ultimately whether they do it what you tell them to do or not is their responsibility. In this case, it is my responsibility. So it's a little different. The weight is on your shoulders.
Right, right. And yeah, you're the one signing the checks. So let me ask you a question here, Sergio. When you guys are evaluating a deal or your team's evaluating a deal, they're passing it over to you. And you guys are evaluating different types of deals because I know that you are doing the sports teams and you guys are still kind of diverse in how you're allocating this capital. And I know you guys are using different types of valuations to be able to get a proper valuation based off the business model and opportunity. But how are you determining which valuation makes sense, or is that even part of your role, or is that something that you're handed to from one of your team members?
Well, there's three types of valuation, right? Basically, the whole industry uses. One is discounted cash flows. That is the other one is precedent transactions, and the third one is comparables, right? Depending on the state of the target, you would either decide to use one of the three or two of the three or make a hybrid of all of them together. We have a team here in-house that does all the DCF runs, looks at all the comparables, and determines whether we should use one or another in determining the value of the target, and also looks at precedent deals, makes an analysis in detail as to what made each deal the way it was, and therefore how can we then take from that and incorporate it into our decision as to what our value of our target is. That we have a whole team, and in the IC, in the investment committee, our team leaders will present to us, being the chair there and the rest of the group in the committee, why they think the target is a good opportunity or not, and justify with their valuation methods and their risk metrics, their KPIs, and any other form of information that they can provide for us to make the right decision as to whether something is investable or not.
Right. So when you guys are determining this, I'm sure that, of course, depending on the type of business, that's what determines the type of model, or whether or not you guys are using that hybrid approach there. But let me get a better understanding of where are you guys all doing this manually? Are you guys having any AI processes currently? You guys, I'm sure you have an amazing fulfillment system right now, but I've seen some more independent sponsors or roll up operators utilizing AI to help them evaluate deals. And I want to know like what you guys are doing at that level when it comes to evaluating deals.
We do have, we do use a lot of AI. We have, when we use Claude as our
Mhm.
primary AI partner, let's put it that way. However, we do have in-house a coder that has developed 37 agents to incorporate into Claude. So by that way, we can completely analyze something very direct. Our system is very sophisticated in
Uh,
reaching out for information, in being able to analyze information. We have agents that are trained as legal experts. We have agents that are trained as financial analysts, associates. We have agents that are trained on structure perspective of the deals. So we do have a very, very sophisticated automated process in our process of evaluating entities.
Yeah, yeah, and so I know like you're coming on a year, it's like a year in, right? But I'm sure since you've been in the financial space for so long, you know how long that due diligence process typically is. And so with you guys being like super AI and tech heavy inside your guys' processes, how did that impact like the day-to-day work on is like are people more so just managing deals and makes their job easier? You don't know, Sergio. You just sign the checks at the end of the day. Let me know
No,
how's
but
that
I mean,
really impact the day to day?
things go faster. That's for sure. But let's not blind ourselves. Okay. AI will give you answers to questions, and you still got to find, the human eye to every single opportunity. You still have to not blindly trust Claude or your agents to do the work. You actually have to go there and make the analysis. And, and also a very significant input. There are certain intangible variables, because I always, in any deal that we look at, my philosophy is I'd rather be in a bad deal with a good partner than in a good deal with a bad partner. So that intangibility of management and their ability to execute is not something AI can give you. That's a personal relationship. That is meetings. That is understanding the philosophy and vision of the target that you're looking at. So it is not just simply, okay, five is bigger than four. There are reasons why five is bigger than four, that maybe the four is more important than that five, issues with concentration of clients. It could be issue with gross margins and trends in the industry that the company is operating in. And of course, how does management has been executing over the past, and what are their plans and vision and models going forward and their strategy to be able to go to the next level. When you receive a pitch or a presentation, every single pitch you receive is investable, because nobody's going to pitch you something that they don't, that doesn't look all rosy and flowery. Nobody's going to
Yeah.
say, I want you to buy this company, but we are doing really, really bad. They always
Yeah.
tell you we are doing good and we can do better, and this is how. So everything lies down with execution, and I think that is a key aspect that AI yet has to be able to determine. So yet AI can give you a foundations and a basis. It can do the analyst work and maybe some associate work, but it doesn't do the work that a VP or an MD or somebody at a higher level has to do with management and be able to understand and align the strategy of the fund with the strategy that the management is implementing in the target company.
Hmm. Yeah, I mean, I like and appreciate that take as well. So yeah, thank you for sharing. When I'm considering like the use of AI, one of my main factors that I'm considering is that you have something that's like assistive, where it can assist you to do things, and then you have AI that's agentic, where there is a capability. I think that there is sometimes some sort of discrediting of AI is able to do tasks that are beyond just basic calculations or machine learning. It has the ability to cross-reference information as long as it's prompted, and then also if you're working with a proper developer to be able to lay a proper system to pull data and cross-reference data. That's all that really is, because the higher leadership a person is, that just means that they have a ton of experiences and they're able to cross reference their own experiences, knowledge, and expertise amongst different areas, which makes them a better decision maker. But if that can be properly fed to the AI, that will just enable the leadership staff to be even stronger. And that's more so my take is that, yeah, majority of businesses that are using AI are using it in an assistive manner. The businesses that are using AI in a way that's like building like superheroes, and I don't know if you heard about like that one man business that exited. Did you hear about that? It was a peptide company. It was really just him and his brother and a bunch of AI agents. That type of business, for that to be able to grow to over $1 billion valuation with only 2 employees, needed to have agentic solutions rather than just assistive tools. You know what I mean?
I totally agree with you. I mean, people at this stage are using AI to find, they're looking at AI like Google on steroids. And AI can do actually a lot more than just find information and check, verify facts and get data from the internet or different sources. That's what we have. We build like 37 agents, like I mentioned before, that do a lot more than that. So it's actually our AI has learned throughout the process that we've developed the agents and the information that we input and the way that we prompt stuff. Our AI actually has been able to, replace a lot of analyst positions, has been able to do the work that associates would be doing. So it is a thinking AI. It's no longer just simply an information or assisting AI. It actually thinks and recommends decisions, recommends the structures. It actually goes beyond that and evaluates whatever you are trying to do with pros and cons so that we can then analyze and be able to modify it to be more aligned with what we're trying to do. So our agents are highly sophisticated. Nonetheless, it only reached to a certain point, and then comes the human component to it, like I mentioned before. But we've developed our automation of our systems, and we have internal apps that we've created that we can not only work with, but we can also track and go in there and look for through our emails and respond emails without us doing anything. So we're fairly automated, and we try to do this because it's an efficiency. We a deal that would have taken 9 months to close, now we
Yeah,
can do it in 2,
yeah,
if that,
exactly.
maybe even less. You know, but then there's the human component. The human
Yeah,
component has to be there. I don't think AI is at a position to replace
yeah,
a decision maker at the end of the day, or the person that is going to have the weight on their shoulders as far as the decision is concerned. Plus, investors at the end of the day, they want to know who is the one making the decision with their capital. And
yeah.
so even though AI does a lot and ours, you know, we've sophisticated it enough and modified it to do a lot more, still the human component is going to be there.
I agree. You do need to have the human in the loop, that person in making decisions currently, at the current phase of AI. But I'm excited to see where it goes within the next couple of years. I always like to wrap up here with this segment we call the operator seg, Sergio. So I ask every guest these questions because we're building a data set on how high level operators and decision makers think. So I'm gonna run through these pretty quickly. It's 5 questions. I say the question, you spell out the first answer. You ready?
It's like a bullet back and forth.
Back and forth, yeah. Cool. All right. So when you're making a high stakes decision, what's the first principle or framework that you rely on?
Financials.
Financials. Got it. Well, what about financials, mind you? Is it just the revenue?
No. I think it's more than anything trends. The first
Trends.
thing I
Okay.
look at a company is the trends, and if their trends work, then we look at where can we increase value from those trends, and then after that we look at management and their strategy and execution.
Got it. All right. Well, what's the most common bottleneck that you consistently see that prevents companies from scaling effectively?
Lawyers.
Lawyers. Talk more.
Yeah. The lawyers, for some reason, nothing against lawyers. We have great lawyers, but some of them are good lawyers. Good lawyers find problems. Great lawyers find solutions. There are very few great lawyers. And they just take way, way too long. We have a few agents that do with legal in our system. And a lot of times we use them instead of lawyers because they're faster and better.
Uh,
Unfortunately, lawyers take a long time in doing the things that they want to do. And that creates bottlenecks. Legal, definitely.
yeah, yeah. So we need more lawyers to, get AI in your business, so you can push your projects over, push your projects through a lot sooner in your cases. So got it. Okay. So when you're evaluating leadership teams, Sergio, I know you got a good team of people working with you right now. What's one signal that tells you that someone's A+ talent?
That's a tough question. It's hard to identify A plus talent. A lot of times, A plus talent is a skill. It's not actually just a bare talent. Go to be A plus is a skill that you develop, and you got to have the nature and the talent in it to develop and get to A plus. It's like a tennis player. No matter how much you practice, if you don't have it in there, you're not going to be good. And if you have the talent, you can be good if you work hard on it, right? But I would say poise and presentation, I think, is the first thing to identify. In today's environment, the ability to network, communicate, and build relationships, given that AI does a lot of the work, that tedious calculations and everything that we used to do with AI does it. At this point, an A plus talent is going to be the person that can actually develop, build, nurture relationships for business.
Yeah. Okay. I love that. Someone who actually puts the cherry on top. They care. They care about the presentation. They don't just make you a bowl of ice cream, but they make sure they give you a nice little cherry on
Yeah.
top of that.
Yeah, I
They
mean,
reach out every once in a while.
successful people are going to be the people that actually can build relationships
Okay.
and act in a manner that people want to hang out with that person, that want to do business with that person, that want to entertain their company, and that's going to be an A plus player in this industry.
I agree. I agree. All right. I have two more questions for you, Sergio. So, if you actually had to double the value of a company in 12 months, where would you focus?
Oof, many areas. How do you value how do you double the value of a company? It depends what kind of company it is, right? If it's already established company, there are two ways to increase the value of established company. Either you increase revenues or you reduce costs,
Mhm.
right? An additional thing, if you have the ability or the cash to be able to, do some CapEx, you can go out there either to build whatever thing you're producing to a bigger scale and find some synergies and economies of scales in that sense, or you can go and grow through acquisitions. If it's a startup, how do you value how do you double your value? I think you double your value with a lot of PR because startups are concept, and the concepts value double in value with the right networking and the right people that you go to. You create a clout over it. So it's
Mhm.
different ways how to double your value. Traditionally, increase revenue to reduce costs. That's your DCF model. And if you do that, then your value will increase. Non-traditionally is clout, marketing, PR.
Understood, understood. And so, following the DCF model, just increasing your revenue or decreasing your costs. Otherwise, your startup, your smaller business, get more clout, get more followers, get more people to buy into the vision, and that's how you can double the value of your own company.
Definitely. I think if you're a small business that you're starting, get your name out there. Go out and start, network with the right people. If a BlackRock or a Moelis or a Arid, Redbird or any of the KKR starts mentioning your name, suddenly you just double your value just because they mention your name.
Yeah.
So, and that goes back to the idea of what is going to be an A plus player in this industry and how important is the human touch. I think networks and relationship are the ones that are going to take people to the next level. Things are scarce in many, many areas. And as scarcity continues to grow in job opportunities, in business dealings, you want to deal with the people that you know, the people that you've done things with before. And so grow your network and being in the loop and all that kind of stuff
Mhm.
is what's going to make you successful.
Yeah. No, thank you. Thank you. Last question I have here.
Mhm.
What's a mistake that you see founders and execs repeat over and over again that truly cost them the most?
Oof, that's a tough question. I see. Should I respond in general terms of my experience?
Your experience is fine.
Belief. And sometimes you try to believe that things the way that you see things are the right way to see things. And a lot of times you gotta move away from what you believe and try to be more receptive to other people's ideas or positions or concerns. Because I've had experiences where I kind of stubbornly set myself into certain investments, and I was a little closed to listening to other suggestions or opportunities to move forward away from what I was trying to do. And when your belief is too strong in something, you're not actually being able to. It's like running with blinkers. You're not seeing the whole picture. So I think be receptive to everything, and lack of reception to everything around you. Sometimes that narrow-mindedness has cost me in the past.
Yeah. Yeah, they say that, like, sometimes seeing the world from, the rose-colored glasses, right? And you can be, like, overly optimistic, unrealistic positivity, or just ignoring those little negative details, over time that really can sometimes bite you, or you can be shooting yourself in the foot. So, I mean, I love that, and then sometimes being okay with, like, your own narrow perspective or perception of a situation. It can hurt or hinder by getting outside advice. And so it's always knowing when to take that outside advice in or block it. It's a never ending game of knowing, hey, I'm not gonna listen to that, but actually that's something I need to hear. So I love your perspective that you shared today, Sergio. We had a really diverse conversation here. I didn't expect to even go so deep into AI, but I learned a lot more about what you guys are doing out there and your investment opportunities, invest into these sports teams. I can't wait to continue to learn more about, what you guys do, in the future. But yeah, Sergio, we're gonna go ahead and wrap up here. Guys, where can they find you by chance?
Well, where can we? We're located in Fort Lauderdale, Florida, downtown Fort Lauderdale. That's
Okay.
where offices are. You can go to equiturn.com.
What's that?
And if you're interested in looking into our funds, you can go to megaalphafund.com.
Mhm.
And there's some information there that you can look after, and then you can request to receive a little more detailed information. So we're at equiturn.com and megaalphafund.com.
Perfect. Guys, we're gonna have all the links below. Make sure you check them out. Make sure you check out Cell Ready AI. We'll see you guys on the next episode.
Thank you, Lisa. Thank you for having me.